What's up, guys? Eric here. I've got 3 stocks that I think are buys at these levels and lower. Let's go. All right, I'm trying out some new tools today, guys. Let me know what you think in the comments below. The first stock is Enphase. Now, this stock has been absolutely crushed since 2022. The end of last year, this stock was $340 a share. Now trading at $122 a share, and I think it's getting attractive. I'm going to tell you why. Now, there are some short to midterm risks to consider. This stock is interest rate sensitive. CPI data just came out yesterday. That came in a little bit hot, so inflation. So there are fears from analysts that maybe the Fed will raise rates one more time, and that's going to put additional pressure on a stock like Enphase. So you're seeing some analyst downgrades. Here's one from Truist, seeing longer recovery for residential solar. Now, the market cap on this is about $16 billion. The forward PE ratio based on Seeking Alpha is 23.8. Revenue growth 61%, and that's pretty strong, especially considering the valuation. We'll look at valuation more closely in a second, and then a chart. For each stock pick, we'll look at a chart. This does have about 8% short interest. That could put more pressure on the stock, so something to keep in mind as well. This is just a couple days ago, the stock was down. Truist Securities downgraded from buy to hold. $135 price target slashed from $210. So they're seeing potential for a more prolonged recovery when you think of U.S. residential solar. And they think that risk is greater than what's currently priced into shares. Now, positives here, Levy does continue to see Enphase shares warranting a premium to the peer group average, given the company's leading margin structure and differentiated products and technology. So we have deep dives on the channel you can check out, but from a high level, this is really dealing with microinverters with solar, and they are getting more diversified into home storage, so energy storage solutions, electric vehicle charging, and more. And more positives here, it's saying that they expect Enphase to play a meaningful role in the theme of home electrification over coming years. But analysts are always thinking about short term. They're thinking about 6 months and not 6 years. And this could be an opportunity for investors. So the 52-week range here is about $118, not much lower than we're at now at $122 a share. That 52-week high is almost $340 a share. So the price to sales ratio is just under 6 at 5.83. Now the PE for this year's estimate, this is on Fidelity, 23.5. Next year's estimate for the PE, 18.2. And one thing you can look at is PEG ratio. And if you're looking at PEG ratio, often you're looking for 1 or less. And I will say that if you find something with 1 or less PEG ratio that has 60% growth, it's not all that common in today's market over the last several years. So a PEG ratio of 1.18, it's getting pretty attractive when you consider the growth. So looking at a chart here, guys, and we do chart day every single Wednesday in Patreon Discord. If you want to join us live at 9 o'clock a.m. Eastern, visit patreon.com/firedupwealth. Join us live every Wednesday. When you see orange, it's a previous chart day. Yellow is today's chart day. This is actually from yesterday. And I have been buying shares. I bought shares in both portfolios. So I've got a primary taxable brokerage, about $1.5 million. I bought 20 shares yesterday. Also bought a share in the Fired Up Wealth community portfolio, 1 share at $119.17. You know, looking at this chart, back early 2022, this was about a $113 stock. And it ripped up to $220, pulled back to $129, ripped all the way up here to $325. $340 here just actually December of 2022, and then it's fallen off a cliff. So I've been waiting to buy this stock, and I was waiting for $125 or less dollar cost average in my primary taxable brokerage. And when it got below $125, I nibbled a little bit around $123, and I've been adding it when it gets below $120 a share. Several other members in the community are also buying this in Discord. So my preferred entry, $125 or less, and I do think it could see more pressure. I did this yellow circle 2-3 weeks ago and said it could come in this area, and it's exactly in that range. It didn't get quite to the bottom of that yellow circle, but really close. That's closer to $116. This S3 down here, these are Fibonacci pivot points. This S3 is closer to $100 a share. And I could see it taking a little bit of a leg lower, maybe $100 a share, maybe even less than $100 a share. But I think the risk reward here for long-term investors is solid. If you're investing for a minimum of 1 year, preferably 3 or 5 years, I think this stock will be worth a lot more than $120 a share. So I like the dollar cost average in here in this yellow circle. If it drops down again, there's a second yellow circle really between $117 and $100. Buy some more in that area if it gets there. I'm not saying it has to happen, but it could. And it could even break $100. And if it gets below $100 a share, I think that's a pound the table moment. So do your own homework, make your own decisions, but I think this is a great long-term investment. These levels and lower, it certainly can go lower, but I've got a 5-year time horizon and I'm bullish on Enphase long-term. Thanks for watching, guys. I've got more to come. Before I go on, just real quick, if you're new here, please subscribe to the channel and click that bell for notifications. We broke 50,000 subscribers recently. Let's take it to 100,000. If this video is helpful, drop me a like and drop me a comment. And I invite you to join us in our private community, Patreon Discord, by visiting patreon.com/firedupwealth. The next stock is ASML Holdings. Now, this is a semiconductor equipment manufacturer dealing with EUV, and they really have a monopoly in their space. And as we build more foundries, we've got all the stimulus going not only into the US when you think of the CHIPS Act, but also in Europe and other nations. Governments are realizing the importance of semiconductors, the new oil. And these governments are investing in that infrastructure, which involves foundries. Now, foundries are going to need equipment from semiconductor equipment manufacturers like ASML. And this isn't a cheap stock, 30 PE ratio here on Fidelity. It does pay a dividend, a little over a 1% dividend, and it's a $243 billion market cap. It's trading right now at about $621. The 52-week range, $363 was the low, $771.98 the 52-week high. And it has next to zero short interest, 0.35%. Now, this is another one that has an attractive PEG ratio. You're looking for one or less with decent growth. This does not have as much growth as Enphase, but I would say that it has less risk. So it's a higher quality company. It pays a dividend. This PEG ratio is a 1.3, which I think is very solid for what you're getting. It's one of the few companies when you think about true moats. I mean, it has a moat much more than a lot of other companies that we talk about. So we just looked at ASML yesterday on chart day, and you can see it bounced off of this. And this is October 2022. A lot of stocks bottomed out. It was about $363 a share, and it ripped all the way up here to $775. Now, of course, you see it's pulling back, and it's trying to find a footing here. It got down around $610 a share this morning. Now, I have a buy order at 607, a limit order. It just missed that this morning. These are bullish candles. It's trying to find a footing here. Of course, if the overall market rolls over, this can go lower, and this S3 is down here below $600 a share. So this S3 is at $593. I think if you can get it $600 or less, dollar cost average, I think it's a solid long-term investment. Even where it's at now, I don't think it's too bad, but I really prefer it below $600 DCA, and I was willing to pay $607 just based off some of the technicals I was looking at, and it just missed this morning. If it does bounce up, it's looking to a bounce of maybe $697 on the upside, and it's going to depend again on the overall market. If the overall market sells off, you could see more pressure, and that would be a better opportunity to buy. And one thing I told the gang, we've had 2 bear markets in the last 2 years, and that's highly unusual. This period since the pandemic has really been unprecedented. There's nothing to compare it to. It was a black swan event. And so it's easy to make a bear case right now. There are macro risks. We also can say, are we really going to go into a third bear market within less than 3 years? Nothing's impossible, but some food for thought. Now, the third stock, this is more of a speculative stock. This is going to be Rocket Lab. So it's been selling off the last couple of days. Rocket Lab stock declines after founder files to sell $22 million in shares. Now, this is a small cap. It's $2.59 billion. Impressive revenue growth here, though, 79.74%. It does have 7% short interest, so some people are betting against it. Keep it in mind. So Peter Beck, founder and CEO of Rocket Lab, he's going to sell about $22.3 million worth of shares. And this recent quarter wasn't stellar. Your revenue growth was 12% from a year earlier. But when you see a founder, CEO sell shares, the market often doesn't like that. It sends the wrong message. But I think it's important to look closer at that because each situation is case by case. So some comments here on Seeking Alpha. Oh my gosh, selling 3.6 million shares leaves Mr. Beck practically an outsider with ownership of only 483 million shares. So kind of sarcastic here that it's not really that significant. Now, I like to be neutral and tell both sides, and this is a spec stock, and we say spec stocks can be 10x or 0. These can be high flyers, but they carry the most risk. Rocket Lab will soon have to raise money, and there's some truth to this. When a company is burning cash, they don't have positive free cash flow. They have to raise money, dilute shares. Credit's more expensive in the near term. They can't afford a plan beyond 2 years. So you have to understand the risk if you're buying a stock like Rocket Lab. Now, Peter Beck, his salary is $486,751. And that sounds like a lot to you and me. But in terms of CEOs, this isn't a huge number. And so part of his compensation comes down to his stock-based compensation. CEOs are getting paid a lot more than they used to. Skyrocketed 1,460% since 1978. So they're paid 399 times as much as a typical worker in 2021. Now, before I say the next part, don't freak out. I understand that Rocket Lab is not a Fortune 500 company. It's not even close. But just for perspective, the average salary of a Fortune 500 CEO is $15.9 million a year. The highest paid CEO, Elon Musk, in 2021, he saw compensation worth around $23.5 billion. So this is another wild chart. This was $3.48 back in December of 2022, and it rocketed all the way up to $8.05. And it's fallen off a cliff. You can see it's got a gap down. It's broken some of these moving averages here. It's still holding the 200-day, but not the 50 or the 100. And this S2 is around $5.08 a share. And I'm moving this red line up because this is the 200-day moving average, but it's just below $5 a share. So you might see something like $4.95. I think if Rocket Lab gets in the fours, it's an opportunity to buy as a spec investment. Don't go too heavy on it. Dollar cost average, and you're really thinking probably 5, maybe even closer to 10 years out. You know, Rocket Lab expects TAM to reach $1 trillion by 2030. You look at Morgan Stanley, they're saying $1 trillion 2040. So, and there's really only a couple players in this space. I mean, obviously SpaceX is going to be the dominant one. And if you can't invest in SpaceX since it's private, I think Rocket Lab, when you think of launch companies, is the best stock to buy if you're trying to focus on space exploration with a publicly traded stock. So I've been saying on this stock, $5.50 or less dollar cost average, but my preference looking at the chart here recently over the last day or so, I prefer this stock if it gets below $5 a share in the fours. If you're really bullish on it, it's probably an opportunity to nibble. Just don't be surprised if it does go lower. And this stock was below $4 just back in May of 2023. So that's always a possibility. You see it in the threes again as well. You have to have a strong stomach to really invest in these stocks. They do have a lot of volatility. It is a spec stock and it's not for everyone. If you're new here, make sure you subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.